Hi, welcome to the Market Alert for Tuesday 28th of August 2018. So we're following the bank holiday yesterday for the UK. Looking at the pound, you can see how this broke out to the upside, and also how the market sat on the 200 bar moving average there. You can see that before it then moved to the upside sharply as the US dollar moved to the downside yesterday. Market trading up to the R1 80% of the time the market will stop. Also the psychological level there at 130, where it's 129 I think. Let me just check. It's very difficult with varifocals to see. Yeah, it's 129, and the font being so small. So 129 psychological level yesterday. I thought it was a bit high for 130. And the market currently trading back down towards the 200 bar moving average below the 20 and the 50 at the moment, and also the DP. Need to close above this in order to move higher. Bit of buying in there at the moment to support this as well. So any move to the upside, you'll need to see the market break through the 129 level there. And in the daily chart, well, this is the reason why it's banging its head. We put this in the chart, marked it up last week, and you can see there the market sitting at that 129 level. So a bit of resistance here as well. Got a bit of an uptrend going there, but and it wouldn't take a lot to actually break the market back to the downside and retest the 127.27 level there. News today, not a fat lot at all. We're just coming off the bank holiday weekend. The US will have their bank holiday this next Monday for I think it's Labor Day, and then that will be it until we go to Christmas for bank holidays. So that's we'll take care of that, and then we'll see an increase in the news. The school holes will be over, holidays will be over, and then we'll get back to some decent volatility as well. Well, there's nice and modest volatility at the moment. It's quite pleasant actually. I quite like what we've got at the moment. It's nice and steady. We don't want 300 and 400 point price bars. They're not the good things to trade because of the slippage that you get. You just don't get filled at the price. It's okay if you're in a positional trade and you've been in for a while. It's great and it's going in your favor, but it's no good trying to get in and out on an intraday basis. The Dow, everybody missing in action on the European front. This allowed the market to move higher. It moved higher in the pre-market session as well. You can see there again you've got that cluster of averages sideways, and then eventually the market breaking out. You can see the buying coming in there with the green bars and then moving higher. Where does it stop? Just roll this over. It stops at the R3. R3, if the market trades to this level, it will stop 100% of the time, and that's exactly what it did when it got to this level. It stopped and it traded sideways, and that's why it's important to use the pivots. So you've got 80% at the R1, 90% at the R2, and 100% at the R3. We'll go through, you'll see it go through, but it won't continue higher until we get to the end of the trading session and we start a new session, which you can see there. So that allowed the market then to start again, and you'll see it taking out the high and the close of the session, that one day session. You can see it's coming back there, a bit of profit taking in the market at the moment. And if I just do this for you, you'll see where the new upside R1 is, R2 and R3 there, and the same to the downside as well. Want to watch for support at the 200 bar moving average in this market. If we look at the daily, you'll see why. Again, we drew the 76% in last week. The market drove through this yesterday, but look, it's fresh air. Markets closed in the west. Opportunity for the market to just move higher. Market makers pricing up shares, no volume in buying. No surprise to me or whatsoever, because that's how it works. And yeah, let's see what happens. They may see some profit taking from yesterday's opportunity to move prices higher. Simple as that. And Bitcoin also moving higher as well. What you want to do here let's just see what this market's got at the moment. If we go from there across today, we can see that we've got 7,144, and the market's heading towards this. We're actually above the midline in the average trading range. That's 20 bar moving average, and heading towards this upper limit. Now what you can do here, because you can't get a 76% retracement in off this bar because there's nowhere else to, normally we come down and then start to go back. But what you can do is take the fib retracement tool. I'm just going to click twice there, and you'll see there's your 76% where the market's currently stopped, and that's going to be 6298. 7,000 is the level for this market. So in order to move high, you've got to get through the 7,000, and then 7,144 is going to be an issue, as will be the 200 bar moving average there. And that's the bigger picture for Bitcoin, and that's it really for a quick roundup and catching up from the bank holiday weekend. Right, that will do it for this one. If there's anything to report, I will let you know, but other than that, as ever, thanks for watching. See you in the next one.